Hello, my name is Jensen and this is my colleague Lewis. And today we will be discussing some useful tax planning tips and thoughts. So, what are some basic things that can be done?
So you can try and ensure that all allowances are used wherever possible. Make full use of personal allowances, personal savings allowances, dividend allowances, the capital gains tax annual exemption, and the inheritance tax annual gift allowance.
Are there any tips for married people?
Yes, if you are married, it's a good idea to arrange your sources of income in an efficient manner. For example, utilising both your tax bands where possible. If entitled to, have you claimed the marriage allowance transfer? This allowance enables one spouse to transfer 10% of their personal allowance to the other spouse to get relief of £251. However, to be eligible for this allowance, one spouse must have their income below the personal allowance of £12,570, and the other spouse must pay tax at the basic rate.
Could you let us know about the rise in national insurance?
Yes, from 6th of April 2022, there will be an increase to the rate of national insurance charged by 1.25%. The rate of tax on dividend income will also rise by 1.25%. Given the future tax rises, you may want to consider taking income out while you can. This may mean paying tax earlier, but at a slightly lower rate.
Is there any tax advantage to paying pension contributions or making charitable gifts?
Yes, where pension contributions and charitable gifts can be particularly beneficial are if you have just breached an income sensitive threshold, such as the £100,000 income limit, above which entitlement to the personal allowance is withdrawn. And for those receiving child benefit, there is a £50,000 limit, again above which entitlement is gradually withdrawn. Pension contributions and charitable gifts can help as they are considered in determining whether an income threshold has been breached. You can also obtain higher rate tax relief when paying pension contributions and making charitable donations.
What about ISAs?
If you are able to, you can make use of your ISA entitlement. You can invest up to £20,000 in any tax year. Whilst investment returns might be modest, ISAs give protection from both income tax and capital gains tax, and therefore could make a big difference to future years' tax liabilities.
Is there a limit to the amount of pension contributions that can be made?
Yes, you can only contribute up to £40,000 gross for the tax year. This includes employer, employee, and private pension contributions. You may also benefit from the carry forward of any unused pension allowance from the past 3 tax years. Please do bear in mind that if your income exceeds certain limits, then this allowance is reduced to £4,000. Please also bear in mind that there are pension lifetime limits to be aware of when considering paying into your pension pot.
Could you tell me a bit about capital gains?
Yes, maybe sell assets while the going is good. Capital gains rates are likely to rise in the near future as well. The current annual allowance for capital gains is £12,300, meaning that gains below this amount made in the tax year will be tax-free. Are you aware that if you sold any residential property on or after 27th of October 2021, you now have 60 days to report and pay any capital gains tax due? There are reliefs claimable like main residence relief, which will reduce any tax due. It is therefore vital for you to get some advice as soon as you sell a residential property.
Is there any relief for working from home?
Yes, if you've been working from home, then you may be able to claim some relief for this. Any employee who has at some point during the 2021-22 tax year been required by their employer to work from home for a significant period of time can claim tax relief at a rate of £6 per week for the whole tax year. There is an expectation that the employee should be able to demonstrate that working from home was not by their choice. They had to do so either because they were instructed to do by the employer or were required to self-isolate on medical grounds. You can also look at claiming the exact amount instead of the £6 per week of costs incurred for working from home. However, you would need to keep evidence of this and apportion the costs correctly, as the whole amount would not be able to be claimed.
Is there anything that wealthier individuals should consider?
Yes, there are some things that should be thought about. So, have you considered how much inheritance tax your estate could be liable to pay? Could steps be taken to mitigate this? If you have interests in business, will you qualify for exemption by virtue of business property relief? And if so, how much exemption? Will you qualify for main residence nil rate band? Bearing in mind a home must be closely inherited and a £2 million threshold applies. Do you take steps to prevent your estate from unnecessarily increasing in value? Could you gift assets that are surplus to your requirements? Have you got surplus income that you could gift? Could the position be improved by investing in tax efficient investments such as shares on the AIM market, agricultural interests, or commercial woodland? Could leaving assets to charity help secure a reduction in the rate of inheritance tax payable? You can give away £3,000 worth of gifts each year without them being added to the value of your estate. This £3,000 can be carried forward for 1 year if it is not used.
There are a lot of taxes that can come into play and plenty of complex rules to consider. If you're interested in looking to become more tax efficient, then please let us know. We would be very pleased to discuss the subject with you to see if we can help.